Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 12th through February 16th. We're in honor of Valentine's Day this week. We're going to discuss why we believe you got to love trading, why we love trading, and hopefully you do too. And we'll talk about some strategies, trade ideas on how we can make money and love trading the week of February 12th through February 16th. So let's get started. Welcome, Walter Lyons, Brian Moritz. Thank you for joining us in live chat today. Hope you're having a great week. Welcome, Pawn. Glad to see you today. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of February 12th through the 16th. We keep our notes in publicly accessible Google Documents. Our notes contain links to bonus video, the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas. You can find a direct link to this Google document in the description box below. We keep all of our Google Documents with our weekly trading game plan notes in a publicly accessible Google Drive folder. So you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to that publicly accessible Google Drive folder in the description box below. Welcome to Crow. Thank you for joining us. Hope you all are doing well. So first we'll start off looking at how the markets ended up on Friday on the main page in FinViz. So we could see NASDAQ had an exuberant run. I thought it was quite interesting. These runs in the morning were pretty steady, pretty exuberant, both the NASDAQ and the SPY, which both ended up. NASDAQ 1.25%, S&P up almost 0.6%. We see a market on close, very positive push at the end. Dow was down a little bit, but again, we see that pretty exuberant positive push market on close on the Dow as well. And again, very small loss in the Dow. Even though we see 66% advancing, about 30% declining, we've got 88% new highs, about 12% new lows. Got now 58% above their 50-day moving average, 41% below, and 64 above their 200-day moving average, 36 below. And even though we see a lot of advancers, it really was a magnificent 7-day. So you can see most of the gains were in what was called the Magnificent Seven: NVIDIA, Microsoft, Amazon, Tesla, Apple, a couple additional semiconductors, but the rest of the market was pretty muted over the day, and we'll see that in the sector and group analysis. See PepsiCo reported disappointing earnings, and it suffered a loss due to that. Energy was a little weak as well. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So we've still got conflict, Russia, Ukraine. We've still got stalemate in the U.S. Congress. Stock market news closed above 5,000 for the first time. So we saw the S&P made a new all-time high, broke that milestone 5,000 mark. First time ever. 5-week straight winning streak. Saw quite a bit of volatility in oil. Oil did break back up above 75. Now it's testing the 75 to 80 range. We saw a very drastic decline in natural gas. It broke down below that $2 level. We'll talk about and look at the kind of all-time or recent all-time low where we could find a bottom potentially in natural gas. Did rebound a little bit towards the end of the day. Gold's been just kind of flat between 2,000 and 2050. Again, we see the futures, Dow pointing down a little bit, S&P and NASDAQ pointing up. The dollar's been pretty steady at about, DXY has been pretty steady at about 104. So we've seen just some oscillations around that 104 level, as we can see in the euro. Treasury yields bounced back up and we're strong up into the 4.3 for the 30, almost 4.2 for the 10, and 4.15. So a real surge in bond yields. Again, we've been saying for quite some time we expected another pop in bond yields, which obviously drives the bond prices down. So now we'll look at the individual indices. Again, you can find a direct link to this screener I put together with the major indices in our notes document. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So we can see major indices, the Dow, the NASDAQ, the Qs, the SPY, all had an exuberant run. SPY, very strong breakout. We've got a very steep upward trend. It's a little bit extended above that trend line, so a pretty exuberant run in the SPY. NASDAQ broke out. Again, it broke that previous channel. Now it's got a little bit of room for that upper channel. But again, a very exuberant run in the NASDAQ. Same thing with the industrials. The Dow, you can see it's hugging that lower trend line, very steep trend line. So I would expect, again, chop along these, particularly the Dow, chop along that trend line. NASDAQ testing that upper trend line. And again, I would expect some level of correction in the SPY. That's a pretty exuberant run. And probably warrants some retracement correction, cool off a little bit. IWM, again, is not participating quite as much, although we do see on Friday it had an exuberant pop. Tested, broke maybe just above that resistance line. But again, otherwise, the IWM's been weaker and just kind of oscillating around that resistance point. VIX, again, we'll see in the futures, really been quite muted. It's down below 13, I believe. So look at the technology components. Again, you can access this screener in the link in the notes. So we see this very strong exuberant run in the FANGs. Again, in my humble opinion, I believe most of this exuberant run has been fueled by the Magnificent Seven, the FANGs. So we see that in the FANG-U. ARC did get a pop towards the end of the week, but it's had been declining, so less participation in the ARC-K stocks. Biotech, again, not really participating, did get an exuberant pop on Friday, but again, it's otherwise been just chopping flat, barcoding along that line. Again, SOXL fueled by NVIDIA, as well as the new ARM reported had a big run, so we see SOXL is running up towards that previous high. We'll probably test that previous high, and then we'll see if we get a retracement in that. Broader technology, again, a pretty exuberant run up till that trend line. Would expect some level of correction, rejection from that upper trend line, and the NASDAQ, the Qs overall, as we saw, is testing that upper trend line on the channel. So again, I think many of these components that have had exuberant runs, particularly the FANGs, probably warrant some retracement, some profit taking, some correction. SOXL, probably a rejection from that trend line. And similarly with the broader technology, we'll probably get some correction, some rejection off that trend line. And then, the overall trends in all of these is generally up. Again, you can get these links to these screeners also in our ETF Google Sheet and our Watchlist Google Sheet that are all access, and VIP Patreons have 24/7 access to. So again, you can find these links in the document, but also anytime in our ETFs or Watchlist Google Sheet. So let me grab a quick drink and we'll look at the groups and sectors and industries. Thank you for the positive feedback, the Crow, but honestly, I'm not as much of a technical analysis as there are many people that are better at technical analysis than I am, but thank you again for the positive feedback, the positive comment. I appreciate it. So we'll look at the groups, sectors, industries, and BinBiz. So we see again technology, communication services, mostly the Magnificent Seven, were the strongest sectors. Everything else is relatively muted. I think real estate and utilities were negative part of the day. We see a bounce a little bit in the financials. Again, it was very much a risk-on day on Friday, so your defensive sectors were weak. And also we saw a little bit of a decline. Well, we saw a strong decline in natural gas. Oil, again, between 75 and 80. The week, again, the theme for the week's Magnificent Seven. So technology, communication services, some risk on. So risk off or weak, utilities, materials, defensives. Same thing for the month. So far, February's been, the month of the Magnificent Seven, recovery of the Magnificent Seven. Earlier in January, we saw a little bit of a dip, profit taking, and then a resurgence back into the Magnificent Seven later in January and February. Look at the industries. See a recovery in solar. Again, we've seen these exuberant runs and then retracements in solar. It's got some gambling. We've got the Super Bowl, so some flow into those areas. Semiconductors, again, strong. A little biotech. Weakest sectors, materials, real estate. It looks like uranium has kind of peaked up and rolled over. Same thing with some of the coal. So I think there's an opportunity we'll talk about tomorrow in coal. Again, I think uranium, I guess CCJ reported disappointing earnings. That's probably impacting the uranium sector. Again, I think it's just rolling over and we'll wait for it to come back down and cycle back up. But I think that peak and rollover is finally occurring. Gold, again, not very strong. Silver did have a little bit of a bounce on Friday, but for the week, it's been relatively weak. Again, solar, semiconductors, again, Super Bowl stocks, utilities, again, been weak. Real estate generally weak. Defensive sectors weak. Silver and gold have been weak. Again, uranium, I think, has rolled over and cycled down finally. For the month, again, gold, silver, REITs, real estate, coal. So again, I think some of those areas will be opportunities for a bit of a rebound, particularly if there's profit taking out of the Magnificent Seven. Yes, Easy Mike. We'll look at that BPU. As you'll see, I've added it to our ETF Google Sheet research, and we'll look at that later today. Okay, we'll bring up the economic calendar from last week, see what economic data we had from last week, what's upcoming for the upcoming week. Just a quick reminder, as this economic data comes out, I try to as quickly as possible post it in our Surf the Markets channel in our Discord. Our Discord is free to join. You can find a free invite to our Discord in the description box below. And I think it's a great way to get real-time economic data, also discuss trade ideas with your fellow BeachBum traders. So we'd encourage you all to join and participate in our Discord. You can see as the economic data comes out, I try to post it in this Surf the Markets channel in our Discord as quickly as possible. Really not much new economic data out this week. We did get jobless claims data, as is typical, on Thursday. As you can see, continuing jobless claims decreased a little bit below expectations. Initial claims was a little bit below expectations. Weekly average is a little bit up from previous, but again, all of this data just says the job market continues to be strong. Market really didn't react very negatively to this, as the market is expecting the Fed to pretty much be done. This may just again push out rate cuts farther than what the market had been expecting, but again, the market didn't really negatively react to that at all. So we'll look at the other economic data from the past week, see if I missed anything. Again, we've got Fed officials talking, so that will create some level of volatility, although they're all still trying to talk back. We're not going to cut anytime soon. We're not going to cut in March. It'll be later this year. The economy's resilient. We've got ISM non-manufacturing pretty much in line. PMI a little better than expected. Bond auctions went generally pretty well. Again, a lot of Fed officials talking. Crude oil stocks increased a lot less than expected, although again we saw a rebound later in the week in oil prices. Mortgage rates bumped up just a little bit, although again we saw bond yields pump up, so mortgage rates will probably go up. Crude oil inventories up a lot more than expected, but again, oil prices, the conflict in the Middle East partly driving that, the airstrikes. A lot of Fed officials talked about jobless claims data. Inventories in line. Natural gas storage dropped more than expected, but again, we saw the natural gas price continue to decrease. Baker Hughes is stable, steady. Oil rig count's pretty steady. Overall rig count went up a little bit. See what economic data we've got coming this week. So more bond auctions, more Fed officials talking. OPEC, we'll see if they make any changes. Then we've got core CPI on Tuesday, so that's a very critical Fed input data point. So if that comes in, hotter than expected, that could have a negative reaction in the market. So Tuesday, got CPI, core CPI. Wednesday, got mortgage data, inventories, oil inventories, etc. Get jobless claims on Thursday. So again, Tuesday, CPI data. Okay, so then we get retail sales data on Thursday. So that will be a little bit interesting. We'll see if retail is holding up. Get PPI on Friday. So Tuesday and then Friday we get PPI, and again this is a critical data point as input to the Fed. So we'll see again if the front end of the inflation curve is hotter than expected. That could cause negative reaction in the market as well. And we get Michigan sentiment on Friday as well, so we'll see is there any negative inflections. Last read on Michigan sentiment was pretty positive, so we'll see if the consumer continues to be resilient. Again, we're right in the heart of earnings season, although other than NVIDIA, which I believe reports on the 21st, we've got the others of the Magnificent Seven have all reported. All been pretty, strong. A lot of companies are beating earnings, they're getting rewarded. So anybody that misses or guides down, as we saw with like PepsiCo, Pinterest, etc., get punished pretty severely. So it's worthwhile for you to know who's reporting, what sector they're in, what kind of sympathy plays might you get. If anyone has some notable earnings you're looking for, again, you can see the full list in investing.com, looking at the earnings calendar tab. Again, we have a lot of companies, diverse industries. There's transports, biotechs, etc. So you can look through that whole list. There's also a number of sites, Benzinga, Earnings Whispers, etc., have nice charts with the highlights of the biggest companies reporting earnings. And again, as we pointed out, earnings significantly matter, so it's important to know who's reporting, what sectors, what kind of sympathy plays might that entail. Also, just a reminder, next Friday is options expiration for February. So again, some tug of war around options expiration. Also, the following Monday, the 19th, the markets are closed for President's Day, what is referred to as Washington's birthday in the market calendar. And then we don't get the next FOMC decision until March 19th and 20th. So. And we talked about earnings, how earnings matter. You can hear how we trade around earnings via the link to that bonus video in the notes. So let me grab a drink and we'll jump over to the market screen. Welcome, MD. Thank you for joining us. Glad to see you in the chat. Hope you're doing well. So here's the market screen of the online browser version of Webull. So we also use Webull to do our market analysis, our due diligence, the majority of our trading. And as you saw, if you're not already using Webull, you can still get up to 75 free fractional shares of stock. If you open an account, deposit 25K or more. If you deposit less than 25K, you still get 20 free fractional shares of stock, each worth $3,000 to $3,000. And if you'd use our affiliate link in the description box below, we'd appreciate it, and you can help support our BeachBum trading community. Again, this is the market screen of the online browser version of Webull. So I like this histogram. We can see the distribution of advancers and decliners. So even though we had, a 2-to-1 ratio of advances to decliners, the percentage of advancement was very small. We have a long tail. Percentage of decliners, again, percent very small. We see the same kind of inflow in the NYSE that we've seen on Fridays, and the outflow out of the NASDAQ, although much less dramatic outflow out of the NASDAQ than we've seen, for the past several weeks. So typical Friday inflow and outflow out of the NASDAQ and into the NYSE. Again, just a reminder, you can see the near-term earnings calendar here in the market screen in Webull. So you can see who's reporting in the very near term. So we've got some REITs, got some financials, etc. And you can see who's coming up in the near term. You can also see dividend payments, splits, etc. This is a new feature that they've added to the market screen in Webull. So they've got a heat map, and you can break it down by industry. So we'll probably explore that in more detail in the future, maybe do a separate video on how to use this heat map and navigate it to help you analyze the market in more detail. I want to look at the best performing industries for the week. So again, semiconductors, ARM, number one, Copen, which is actually AR, like the new Apple Vision Pro type thing. So there's other ones that we're familiar with, Copen, E-Man, Woozy. That's a solar. So retail, positive. Again, hardware, software, technology, hardware, software, IT services. This the run in solar. Again, end phase got a bounce, even though um, I think that was more just a bounce that they were oversold. Some financial, some auto, some construction, some freight, a little bit of healthcare, a little pharmaceuticals, some financial. Again, kind of a bounce recovery. Home building, although that was, I guess the home building numbers were a little bit uh, less than previous. I will look at the ETFs quickly. So up on the Russell, up on small caps. So looks like a catch-up. People are betting on a catch-up trade in the Russell. Down on the Dow. Up on the S&P, some slightly. Looks like that's probably a mid-cap or something. Up on the NASDAQ. So NASDAQ technology continues to be strong. Up on the VIX, although again, the VIX really hasn't held any pops and continues to very quickly retrace down below, 14, 13. Again, up on the Russell, small caps. So here it's showing, from Friday, industrial strong, healthcare, financial, utilities. So it's showing some recovery in utilities, so might get a bounce in that area. Communication services, again, real estate, probably get a bounce in real estate. Energy, still very negative. Commodities, aluminum, oil, oil. So again, kind of, bounces in those areas. And I believe we're now in the Chinese Lunar New Year, so Chinese New Year period. So there will be lower volume in Asia, in China. So probably not as much volatility as we've seen previously around China. And then when that ends, we'll have to see what they do in that area. It's been obviously very weak. They've been propping it up. Look at the futures in FinBiz. Let me grab a quick drink. So again, we see this pretty exuberant run, starting in probably mid-January. We've had this steady exuberant run in all of the indices with, a little bit of very brief retracement, the S&P, very brief retracement at the end of January in the NASDAQ, but then again, steady, grinding higher, pretty exuberant runs. Again, Russell bounced, back up. Looks like it's testing that resistance point. Probably get some retracement, some resistance at that previous point. Nikkei broke, I think they said it was a 30-year high. So the Japanese market's very strong. Again, Nikkei new high. The Euro stocks has been relatively strong, so it's grinding higher as well. Not so much the German DAX. German DAX looks like it's pretty flat. We're trading sideways right now. We'll see if it participates or breaks down. Again, as we pointed out, the VIX just can't hold any kind of pop. We get a pop, very quick retracement, pop, very quick retracement. Looks like it, bottom's about 13. So I, wouldn't be surprised if we got a bottom and then maybe another bounce. But again, not a lot of fear in the market. There is a lot of greed, obviously. And as we always say, and as Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. Well, there's a lot of greed right now, right? Again, we see oils kind of, bouncing now. It broke above 75 again, so I would expect it to probably retrace or retest 80 and then probably bounce back down. Again, just news in the Middle East causing that, oscillations, but not really a strong upward or downward movement. Can we see that, severe breakdown in natural gas? So it broke down below 2. I wanted to point out, and we'll talk about this again tomorrow, but if you zoom out a little bit on natural gas, we can find the recent bottom. So the recent bottom was about 1.51 or so. So natural gas still got some downside down to about the 1.5 level. So again, I wouldn't be surprised if we don't continue to decline with some volatility, but we could continue that decline down to that 150, just above that 150 level. Gold, again, been pretty flat, just kind of oscillating around 2050. Silver did get a little bit of a bounce, didn't quite get down to 22, bounce, probably get some resistance at 23, and then, about 23.50 or so. Plenty of room to run. Copper, very steep decline. Palladium, platinum, etc. Again, all following, copper or the industrial metals. So in decline. This is a new 52-week low on palladium. We can look at that PAL ETF in our ETF sheet if you want to try to play that bounce. That ETF is difficult to trade. Again, corn's been declining. Wheat's been pretty flat lately, just kind of barcoding, chopping, so not terribly interesting. See that steep run in cocoa for Valentine's Day and prices, cocoa and sugar. So again, Hershey's, I know Easy Mike mentioned he got into Hershey, and then the CEO came out and said one of their headwinds is this steep increase in price in cocoa. Again, sugar had increase, so their input costs are higher, although they did say also that the GLP-1 diet drugs are not negatively impacting their business. Again, we see the dollar's been, pretty flat around 104, so just kind of chopping around at 104. Again, we saw increase in bond yields, so down in all the prices. We've got some near bottoms, particularly in the 30, so we expect it to bounce off that bottom. 10-year, not so much. It's got further downside, so broke previous support. Further downside on the 10, further downside on the 5, and on the 2. So foreign currencies pretty much following the strength in the dollar. Okay, so we'll go ahead and we'll look at our ETF Google Sheet. If anyone has a particular category, commodity topic that you want to look at ETFs to try to play long or short, we use our ETF Google Sheet to identify ETFs to play. Again, whatever trading idea we have. And again, if you'd like to get 24/7 access to our ETFs Google Sheet, you can get access by joining our Patreon at the All Access or VIP level. You can find a link to our Patreon in the description box below, and also help support our BeachBum trading community. Welcome, Ellen Krantz. Thank you for joining us. Hope you're doing well. I want to talk about an addition to our ETF Google Sheet that we've added in the research sheet mentioned by Easy Mike. So Easy Mike mentioned this VPU, which is a utilities long ETF. It's a Vanguard Utilities ETF. So thank you again, Easy Mike, for pointing this out to us. And we'll take a look first at this VPU Utilities ETF. So in our ETFs Google Sheet, in the Research tab, we can do research and look at different ETFs. So at the bottom of this, I've added VPU. So here's Vanguard's Utilities ETF. So we can see 52-week risk reward, so 1.29. I've identified support and resistance, so as we'll see in the chart, I'll bring up their FinBiz chart, which you can access the FinBiz chart via the link in the FinBiz URL column. So we'll take a look at that. So as you can see, they've identified this 140 as a potential resistance level near the previous peak. We can see it pays a dividend. Looks like a quarterly dividend, $1.30 quarterly, $1.20 quarterly. It is optionable. You see the profile. So seeks to track the performance of the MSCI U.S. Investable Market Index utilities. We can look at the composition in the ETF database in a second. You see longer term, the bottom to top risk rewards about 2.7, so that's not bad. Shorter term, again, not a whole lot. And right now, the risk is a little bit higher than the reward. So again, not something I would pursue at this time. Although again, we can track this now in our ETFs Google Sheet. And as that risk reward profile gets more attractive. So again, you can access the profile for these ETFs using the ETF database links in our Google Sheet. See its composition. It's vanilla, market weighted. Look at the holdings. So NextEra, Southern Company, Duke are the top three utilities. So Southern, I'm not familiar where NextEra is, but I know Southern and Duke. Duke's a southeastern utility, and we can see the weighting. So it's pretty heavy in NextEra. And again, so you can explore, what particular utilities compose that particular ETF and their weightings in the profile in their ETF database. So again, another interesting ETF to watch for utilities. We'll compare that to what we also have. We have a leveraged ETF in our main Google Sheet for utilities. So for utilities up, again, we've got the XLU, which is the sector spider. So you can compare the performance of that VPU to just the XLU, sector spider. Not a whole lot of difference. Actually, the XLU looks like it might have a better risk reward profile. And then we've got this UTSL, which is our preferred ETF to play utilities long. It's a leveraged bull 3X. So this is generally our preferred ETF to play utilities. Although again, you see the risk reward profile is pretty good, but it's got some more downside. So I personally would wait for utilities to come down some more, and we'll talk about how utilities may benefit from Fed rate cuts. And again, as they defer the Fed rate cuts, that may cause utilities to bleed out a little bit. So we'll wait for additional opportunities, but we can keep an eye on that BPU as well as UTSL. Again, you can see we've got a couple of others, UPW. Not quite as much leverage on utilities. And then if you want to short utilities, we've got SDP. So got a number of different ETFs to trade utilities. And again, right now, I think those that we have in our main sheet have a more attractive risk reward profile than BPU. But thank you again, Easy Mike, for sharing that with us. Again, it gives us another option to watch for trading utilities. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So again, if anyone in the chat has another category you want to look at ETFs, otherwise let me grab a quick drink and then we'll spin through some of them real quickly. So if I missed your ticker or your category previously in the chat, please throw them back up. I apologize if I missed it, but we'll try. Again, we're going to look at the ETFs and we'll talk about the ETFs to trade the technology components more so tomorrow. Again, biotech's not been as exciting as some of the others. You can see ARK, K, and SARK. So again, all the pairs to trade the technology sectors. Talked about natural gas. So people mentioned cold, which obviously cold goes up when natural gas goes down. Oil is the long, and we'll talk about, again, watching for that bottom in natural gas at that about 150 level, and opportunity to add to our position in oil and trade that swing back up. So again, cold is the short. Again, longs, UNG, UNL, but again, UNG and Boyle have the preferable risk-reward profile. So again, we'll be watching for that bottom in natural gas. Again, oil, long, gush, or UCO, short, drip, or SCO. See what other categories. Brazil's been strong. I've been looking at Brazil. We talked about Japan being strong. Financials, so the financial sector, long FAS, short FAZ. So we've been looking for another pop in the financial sector. I like the short with FAZ. We'll talk about that again tomorrow. The 52-week high in FAS is 93.99. See, it popped up a little bit on Friday. So if we get that pop again, we'll be looking to short with FAZ. Bouncing. So well, we talked about industrials, so we're already long. We're long SIJ, which is the short on industrials. So you see it's had a pretty steady grind up, looking for a retracement in that. Talked about strength in Japan, so it's very close to its 52-week high. Talked about natural gas, cold, and boil. So again, palladium, you see, is near its 52-week low. So if you want to try to play the bounce, again, we have this PALL, platinum, PPLT. We also, Easy Mike had pointed out another one that was a combination. That's on our research tab, so you can find this SPPP and compare its risk-reward profiles to PAL and PPLT if you want to try to play those. Again, I've pretty much given up on trying to play PAL. It's very illiquid, choppy, and we haven't had much luck. But if you want to try that, you could see, again, the risk-reward profile. In our ETF Google Sheet, we'll talk about RAMX, rare earths, tomorrow. Again, if you want to trade that bounce and then rejection in the Russell, we like URTY, long, SRTY, short. Talked about semiconductors, SOXO long, SOXS short. You can also see another short, SSG. Looking for that bounce in silver. AGQ did start to move up on Friday. So long silver AGQ, short CSL. Talked about solar. Again, Rays is very close to its 52-week low. TAN, they did bounce up this week. So we talked about broad technology. We're already long TECS. So you can short the technology sector, TECS, long TECL. Last week we talked about a number of single stock ETFs, the T-Rexes, and you can find those in the research sheet. And also we'll have a video coming out with our analysis of those T-Rexes as well soon. Talked about bonds, again, yields up, prices down. So we can see the TLT, it's still, significantly above its 52-week high, but approaching that support. Talked about the decline rollover in uranium. We talked about utilities, talked about volatility, wheat, etc. So again, if I missed your category, I'll leave this up for a few minutes and we can come back. Easy Mike is mentioning ARCH, coal. And again, last week we talked about a couple additional energy ETFs we identified that are relatively new. One on coal, which is just coal. And you can find that in the research tab. Also, nukes, which is a nuclear energy ETF. I think I have it under uranium. So, uranium plus nuclear energy. So, you can find a couple. NLR and NUKZ. So again, a couple we looked at last week, coal and nukes, to play those themes. Okay, so I want to get into our themes, our strategies for this week. So our theme for this week in honor of Valentine's Day on Wednesday is why you gotta love trading. And we have a question, a discussion topic, and we'd love to hear, why do you love trading? What do you love about trading? How has it benefited you? And we have this in both um, our Discord, so you can find the link to that discussion in our Discord via the link in the notes, also in our Facebook group. So again, we'd love to hear your feedback on what do you love about trading? Why do you think you gotta love trading? What do you love about trading? And please share your thoughts, your feedback, your experience in those discussion topics in our Discord or in our Facebook group. You can hear some of the reasons that we love trading, why we think you gotta love trading in our previous videos via the links in our notes. If I do have time, I may come back today and we'll babble some more about why we think you gotta love trading and encourage others to participate in trading and how it can benefit you in your life if we have time today. Also got links, and we've been talking about how to make money trading in February, so you can access those discussions via the links in our notes. So also how the markets tend to perform in February, sectors and industries that perform best in February. Again, as those videos point out, February, particularly in the past couple years, has been down. So again, we saw that exuberant run in particularly the technology stocks. Again, historically, February is a bit down. So please protect your profits. Be careful. Again, be fearful when others are greedy. There's a lot of greed. So protect your profits. I wouldn't at all be surprised if we got a significant correction, a retracement, as again, that is a historical trend. And we've had a very exuberant run. So position yourself accordingly. Don't give back all your profits. Tomorrow, again, we'll talk also about dividend payers and option strategies for generating income, while you wait for your top swing trading stocks to set up. And again, I'll come back and talk more about why we think you got to love trading if we have time. But I did want to get back to this question from the yacht insurance guy. So let me grab a quick drink and we'll follow up on that question. So last week we started discussing and trying to answer this question from the insurance guy that he asked on a comment on our When Will the Fed Start Cutting Rates video. And his question was, if the Fed starts cutting rates, what areas do you think have the potential to make money? So last week we identified a few of our previous videos where we talked about the impact of interest rates rising, which obviously cutting rates would be primarily the inverse of those sectors. I also asked ChatGPT what sectors and what market sectors and industries would benefit from Fed rate cuts and which ones would suffer from Fed rate cuts. And I compiled our previous discussions along with ChatGPT's answer to those questions and put them in this video, which you can now access via the bonus link in the notes here. And again, we'll be releasing that. It's already been released to our Patreon members who get early exclusive access to our videos, and then eventually we'll release those on our regular channels. But again, you can access that via the bonus link in the notes right now. But I want to add to that discussion a little bit, and let's talk about some of the things that cutting rates is good for. So when they cut rates, again, I think, in my humble opinion, I think there'll be a run into longer-term bonds to lock in those higher rates, those higher yields in the current longer-term bonds. Okay, so we saw the 30 years at 4.3 or so right now. Again, I think as they get closer to a cut, people will try to lock in those higher rates using longer term bonds. Again, the housing market will benefit. Mortgages, loans, the cost of mortgages, loans will go down. Therefore, it'll be more affordable to buy housing. So the housing market benefits and all the ancillary sectors, appliances, furniture, etc. When you buy a new house, it benefits a number of other sectors. Anything that's financed, so solar, they've talked about why solar has been negatively impacted by high interest rates, because it's something that you have to typically finance. This increases the cost significantly. We'll probably see a pretty exuberant run in solar, also autos, etc. Again, anything that you finance will benefit from rate cuts. Also, utilities, we talked about previously, and you can hear why utility sectors are sensitive to increasing rates via the link to that video in our notes. So when, again, they start cutting rates, some of these utility stocks will benefit because they typically pay, number one, they pay a decent dividend. Number two, they have high capital expenditures, which is typically debt, which again suffers from high interest rates. Also growth stocks, so when you can't earn as high an interest rate in just money market and you want to get a return on your capital, also their discounted cash flow, so the value of their future cash flows gets discounted by the interest rate. So when the interest rate gets cut, the value of those future cash flows goes up, so that benefits growth stocks. Small cap and biotechs, again, tend to not make any money, have high debt, and so alleviation a little bit in the interest rates will benefit them in terms of their debt. They might be able to refinance some of their debt at a lower interest rate if they survive. What is cutting rates bad for? Well, typically any kind of fixed income investing. So again, money markets, I would expect an outflow of money out of the money markets, CDs, etc. Any kind of fixed income is going to suffer as people are going to move money looking for a higher yield elsewhere. Same thing with defensive stocks. Again, they tend to pay a small dividend. They're defensive. And if you're looking for higher yield, rotate into more growth, etc. So I would expect, again, money flow out of money markets back into equities, back into the stock market. This initial run in longer term bonds, again, as the interest rate gets cut, those yields will go down, and so the interest in bonds will probably decrease with additional rate cuts. So I hope that all helps. I hope that answers the question for the yacht insurance guy, as well as all of our members of our BeachBum trading community. So let me know if you have further questions or what you think about this question about, what areas do you think will benefit from rate cuts or suffer from rate cuts. Again, provide us your feedback in the comments below. In our Discord. Again, we'd love to have you participate in our Discord. We've got all kinds of different channels. We can discuss different asset classes like bonds, etc., ETFs, etc. So again, we'd love to have you join us in our Discord, continue these discussions. Again, you can also always contact us via our social media sites. You can find links to all of our social media sites, as well as that invite to our free Discord, our Facebook group, etc., on our homepage, which is beachbumtrading.com, bum without the U. Put that up in the banner as well. So if anyone else has any other quick questions, just checking the chat, see if I missed anything. So again, you can always follow up with any questions, comments. If you have any stocks that you'd like us to look at tomorrow as part of our selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list, etc., you can put those in the comments, again in the Discord, via our social media sites. Again, we can try to take a look at those in advance if we have the opportunity. So again, we hope you'll come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern time on Sundays. We'll talk about part 2 of our weekly trading game plan. We'll select our top swing trading stocks to watch, stocks in our bullpen. Stocks on our shopping list, etc. Additional trade strategies and trade ideas. So again, we hope you'll come back for part 2 tomorrow. Thank you to everyone who participated in the chat today and everyone who's watching after the fact. We greatly appreciate your participation and support, and have a great day.